We're talking with Oliver Sloup, and he's with Blue Line Futures in Chicago. Let's go ahead and take a look here at our futures trade on the live cattle, feeder cattle, and lean hog market. And we have turned higher. Oliver, we had the live cattle with a very quiet start, but we're firming up a little bit as we go. February now up 23 at 122.15 per hundredweight, and April 30 higher, and June is 40 higher, and that's the biggest move upward on the June. It's trading at 115.95. Now, if we look at the feeder cattle trade, you know, we had quite a bit of pressure on that market. I think we were down about 70 or 80 cents when we opened it up this morning. And now they have turned that around, and we have the March contract on the feeders up 60 at 143.43. So you do the math, that is easily figured out to be $1.43 off of its earlier low this morning. We're within 20 cents of our high of the day, so big time turnaround there so far anyway in the feeders. And if you look at the lean hog trade now here across the board, we are weaker. February down 40 at 61.55, April down 58 at 66.17. What's the fundamental factors driving these markets here?
Well, we started out a little softer in the cattle complex, and I think a lot of that was just a little bit of continued pressure from the back half of last week, where we saw live cattle and feeder cattle continue to kind of roll over. We saw cash come in, the bulk of it at 123 last week, and I really think that that puts a little bit of a near-term floor in this market. So we've been using the pullback as a buying opportunity. On top of that, cash coming in steady with the previous week. I think there's good technical support, about 121.50, which represents a key retracement and the 50-day moving average. So long as the bulls can defend this, that will maintain the recent trend of higher highs and or higher lows, and hopefully we can go and propel us to higher highs above that 125, which is just above that recent contract high. So we're pretty friendly here on the fats. As far as the feeders are concerned, we've been kind of that's a little bit more gun shy, but for the most part over the last 2 months, we've been trading in a range for this March contract, 142 to 146, give or take a little bit. And so at the bottom end of the range, that's where you find the best risk-reward ratio. So being a buyer down there at 142 looks good. I wouldn't look to get too greedy if we get up to 146. I think that's where you're going to start to see people take some risk off the table.
Now, why were the feeders so much weaker than the live cattle last week?
Well, we obviously saw the surge in the grains last week, and I think that certainly put a little bit of a damper on prices. But again, we've been trading in a technical range. I don't expect this market to really fly off to the upside or really break down significantly. We're going to trade the trend, which is obviously over the last 2 months been relatively sideways.
Okay, when it comes to the lean hogs now on the charts on the cattle, it looked like they took out the uptrend line. On the lean hog trade, it looked like they broke away from fairly long-term lows only to kind of revisit them on Friday. And now what does that mean for us?
Well, we're long and taking some heat in the lean hog market. We still think there's more room to work to the upside, but last week's rally, although we finished the week slightly firmer, it wasn't the best price action. We saw last Monday we spiked higher but weren't able to get any follow-through. We finished well off of the highs on those rally attempts last week, which is a little bit of a caution flag and kind of tells us that there might be a little bit more pressure to come. But over the long run, I think there's still opportunity in this market for that February contract. 60 is a must-hold area. A break and close below there will certainly neutralize our stance on the market, because I think that would kind of encourage additional pressure in the market.
Oliver, thanks for the insight into the trade. I appreciate it, sir. Thanks for helping us kick off our Monday. Oliver Sloup of Blue Line Futures in Chicago.